Hello, everyone, and welcome back to the Compass Plus podbyte. I'm here today with Sergey Putenikhin, one of our managing directors from the Asia Pacific region. So, Sergey, we're here today to speak a little bit about APAC and what's currently going on in the region. I've seen that digital banking has really taken off lately. Why do you think this is?
Thanks, Declan. Hi, everyone. So I think that you're definitely right in that there's a trend in increasing the share of electronic means of payments. Non-cash transactions in APAC have an annual growth of 16%, and this is something that we observe at the moment. Definitely, cash and checks are becoming less popular as we see it, but they still exist. If we would talk about the frontliners in this process, that would of course be China with the volume of online purchases with 1 billion of people of population is around 1.2 trillion annually. If you're talking about the rest of the countries in the region, they are also quickly getting the pace. And one of those regions is Malaysia, where they mostly use the mobile payments. About 46% of payments are from the local e-wallets and only 29% are bank cards. So as you can see, there's a lot of development now in the digital payment methods. Banks strive to develop their super apps covering many of the digital banking areas. Some of them integrate with marketplaces in their app, which Maybank in Malaysia did recently, for example, and it was pretty successful. And responding to your request, why do people try to get this access to these means of payment is that it's just more convenient for them. And these methods have become more convenient within time. So the audience is becoming bigger, and this is the trend that we see here.
Okay. And I suppose this has had an impact on face-to-face and branch banking. How is that doing at the minute in APAC? And is there still a market for it?
Well, despite it's still mostly in place, the epidemic has made these market players to start thinking of cutting costs in this area too. Keeping on additional personnel, maintaining the offices, and paying the rent costs are becoming a burden to financial institutions more and more. A good example of that this is a concern and that it is on the roadmap can be the recent government initiative in Malaysia to award 5 digital banking licenses to fintechs. This is about to happen by the end of Q1 2022, and there's currently a lot of contending companies in this game, and this would definitely be an important move in the digitalizing the banking approach here. However, it doesn't necessarily mean that the legacy banks will disappear. Many of them are still in the game, and they adapt a lot. So such combination of fintechs and traditional banks, in my opinion, will definitely push towards less face-to-face banking, and it will push towards offering of more services via remote channels. Maybe worth mentioning here that despite there's a lot of contenders at the moment in this digital license, only a few, to my mind, have the right experience, technology, expertise to actually get to this area from their previous activities. I think in the coming year, we'll see a high demand in the properly designed solutions, as legacy systems won't allow seamless expansion of the range of the provided services. So I think that qualified payment solutions expertise would be the most important in this process.
Okay. And how can bank branches reinvent themselves to be more useful to customers? Do you have any examples of that?
The branches certainly need to digitalize their services, make them as many things possible remotely and leave in place only the ones that are really necessary for personal visits. I see that there's big work ahead for the currently existing banks in the region, and they should still work on their digital solutions and integrate the other systems that are at the moment excluded from the digital banking. Such examples could be like refilling all the forms for a loan online, for example, making branch visit appointments via the app so it would be hassle-free. Or you could order a card and avoid, for example, PIN envelopes and make it not necessary to visit the office and assign a PIN form by implementing aquatic technologies. This is something that these guys could really adapt. Also, like all the add-on services like linking a wallet or management of these additional services should be available online. Like I should be able to set a notification channel or like apply some additional fraud check scenarios to my cards. So that should be available online, of course, without visiting any branches. Banks should really analyze the information that they have about the customer and provide relevant services and timely offers, but not just something random that they normally do and offer you something out of their portfolio. This should be done to save both customers' time and their time, and it should be also done in something like not in a non-persistent way. So changing what they have at the moment to something digital will definitely require a lot of work, analysis from prevention solutions, proper KYC in place, and there's much to think about it for the banks at the moment.
Okay. What are the most popular ways to currently pay in your region?
There's a lot of various wallets in the region at the moment, and they are everywhere. And like 46% of Asia Pacific online population use them regularly. Some are specific to one country, some are available for the whole region. So people are using these. They make online banking transfers, and most of the countries in the region implement the national transaction systems, allowing to integrate and offer fast payments for all the banks in the country. Of course, there's QR codes. These made up a third of all payments in China, for example, valued at over 1.6 trillion US dollars. There's definitely NFC. Businesses are massively registering in marketplaces, food payment platforms, and you can pay the majority of them online, even if you don't even physically visit this outlet and if you're not ordering a delivery. Regarding the cards, they're still there, but recent years showed rather quick shift in the mobile payments acceptance. At the moment, its variety is really huge. For example, 67% of Singaporeans have made mobile payments via QR code, and China is expected to have the highest penetration rate for proximity mobile payments in 2021 compared to other countries in the world, with more than 80% of all smartphone users making such payments. Other countries in the region seeing development in the digital payments markets were Malaysia with more than 60% growth in e-money transactions, and Indonesia with more than 40% in e-money transactions. Yes, cash is still there, of course, but in comparison with the last 3-5 years, you can actually live without it everywhere. You have means to pay elsewise.
Okay. Thank you for joining us today, Sergey. You gave us some really interesting insights into the APAC market. To all of our listeners that are tuning in as usual, thank you, and we'll see you next time.